Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Monday, February 3rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to them during the show. Overnight markets here at March corn down 6 at 476. March soybeans were up a penny and a quarter at 1043 and a quarter. And March Chicago wheat was down 1 3/4 at 557 3/4. No export sales announcements here to speak of this morning. So we'll jump right in. Obviously, a real busy weekend. Lots of back and forth on tariff talks scheduled to go into effect at midnight tonight. So I'm sure there'll be a big day of negotiating, a lot of headlines. We were talking before the show. Just feels like we're going to be watching real closely, and could be good reports, bad reports, false reports. But certainly our markets are sure to react. And I'll go to you, Justin. I think it was a nice close here this morning, all things considered. But the volatility's here. So what are your thoughts to start us off?
Friday we saw some crazy volatility, specifically in like soybean oil. As reports are coming that falsely by Reuters and several others that said that the tariffs are being pushed to March 1st. So we had some significant moves and came back later. They announced they were going to go into effect this weekend. So a lot of whipsawing there just on, the same headline, just getting falsely reported. So I expect that kind of volatility, to your point, as we kind of move through these waters. There's already announcements of talks being had today, between Mexico and Canada, U.S. China's supposedly coming out with some proposals for purchases. So a lot of these things kind of going on. If you're a big bear, there's a lot of cheerleading that this thing's completely over and Katie bar the door type thing. And we're down 6 cents and up a penny in beans. So probably pretty disappointed if, big volume traded. March corn hit the 25-day moving average, was kind of just kind of short-term one that I look at for, areas to buy or sell if you're, trying to go with the trend. And beans closed up a penny. Oil's up 130. I don't know. I feel like it was pretty orderly considering, all the unknowns. Obviously, the equities was much bigger move overnight. Still down pretty sharp. The dollar was up, very sharply, and all that stuff's kind of moderated here a little bit. So, I don't know. I don't think we're coming from super high prices. We have, a ton of new fund longs, big open interest. So, to only be down 6 in corn, for example, after all the new longs that have been built is, I think, pretty impressive. Day's not over. We could be sharply lower, but to start, I think that kind of encouraging how the market's behaved, I guess, in my opinion, considering all the pressure.
Yeah, absolutely. Ben, what's on your mind this morning?
First day since December 19th, we traded below the 20-day moving average. Very methodical. All of the outside headline noise doesn't make more corn for the next 3 or 4 months. We're the main destination for anyone who's going to need corn for a little bit. So we may shake this out a little bit more. But when you look at the implications, 22% of Canada's GDP is exports to the US and 35% of Mexico's, versus like 1.5 to 2% of US. This is a humongous difference. And I think it really behooves Canada and Mexico to sit down and fix this before they get hurled into a deeper recession. Now they're picking and choosing, it sounds like, some of the things that they're retaliating with. But I think that we're going into this, whether you agree or disagree with it, that's not my point. I think that we're in a much stronger bargaining position than they are to get, if it truly is the end game is to control the border and stop the flow of fentanyl. it's a lot easier to try to participate and cooperate with that than it is to watch your economies really flounder because of it.
Well, that's a good point. I mean, you saw how quickly Colombia caved when this deal came down, and then you look at global markets overnight. I mean, Justin, you made this point last week. It's like, we're the strongest, and at this point, everybody else is kind of teetering, and they can't afford to have this global meltdown based on these deals. It's just, we are in a position of power, it feels like, right now at the negotiating table.
Yeah, I mean, a lot of these economies are based on our economy, so if we're trying to reset things, and all the headlines obviously here with our traditional news sources are, all the super inflation we're going to get here. Well, Mexico and Canada making the same tariffs, it's going to, be exponentially more painful for them, for the goods and services that they need. So the first thing you see when you have those tariffs is you see the currencies realign. So you saw, a big drop in both Canadian and Mexican currencies. So that's the first thing you do. I think Canadian dollar traded at 22-year lows against the US dollar as far as weak currency. So you kind of get those natural readjustments, and that basically devalues, right, the value of their currency, right? So their purchasing power goes down immediately to try to rebalance the effect of those tariffs. So that, hurts the economy, all those kinds of things. And I think we're going to make a deal. I think, I saw Goldman Sachs, some of the other big players think that these won't last too long, probably for those reasons. It's too painful to last that long. So, you never know exactly what the end goal is with Trump. Obviously, he's kind of playing a different game, threatening the EU. So, I mean, we're going to have a lot of whipsaws here while we go through this.
Yeah, well, and China to that point too. I mean, the first headline from the Wall Street Journal here this morning was that, looking at negotiating a deal and getting to the table because they just can't stomach a really, really big fight.
Yeah, we talked about this. Trump doesn't really forget. In his mind, he cut a deal. They didn't honor it. The previous administration didn't enforce it, and he's not just letting it go. So I think that's still on his forefront. Is we made a deal, you guys didn't live up to it. So that's why in my opinion, try and be open-minded here with the markets, but you can't really rule anything off the table here, bullish or bearish. So you just got to be open-minded.
I think that the situation in Panama is really kind of reflective of his approach. 2 weeks ago, 3 weeks ago, it was, we're going to invade Panama and take the Panama Canal back. And yesterday we signed an agreement where their relationship agreement with China comes to an end. So he shoots high to get what he wants below that. And, I would expect something similar with Canada and Mexico. Ultimately, we're better off when we work together, but there has to be, I think that we probably should be looking at some of the terms of a few things and use that to our advantage to do the things that really swayed the election, which was border control and whatnot. And the other thing is we have gotten really used to orderly markets. I mean, you have to go back to summer till we actually had some really bigger trading ranges. But for the most part, it's been pretty orderly for the last 300-400 days, less big breaks off of taking weather premium out. I think you have to start opening up an imagination, especially with the risk of headlines that are not certifiable, and then ones that are certifiable. And we typically, when we see these kinds of things, we see either people really freeze up or we start seeing wild ranges. It's early in the year, so I'm going to lead towards bigger ranges for now.
Yeah, you preface weather. What are we thinking about South American weather? I mean, I know tariffs are on the forefront of everybody's mind, but we still got, a growing season and harvest delays over in Brazil. So what do we see over the weekend there?
Well, from what I've seen, probably improved a bit from where we went on Friday. A little drier in some of the wetter Brazilian areas, a little wetter in some of the drier southern Brazil, Argentina areas. So that's what's actually, I guess, I'm most impressed with on the beans closing a penny higher. I thought, they actually had some kind of fundamental weakness with it. Now maybe just it's been kind of the weaker one right, against some of the other commodities. So maybe that was just part of it. And soybean oil is obviously up a ton. Meal's been breaking. If we limit the amount of Canadian canola coming in, that's a pretty big amount, for our renewable diesel and just the replacement of soybean oil as we, use diesel as well. So it is a big number. I mean, that's why that was the one that was moving so much on Friday as the headlines changed. So, that's what, to me, that's kind of the bellwether here of what policies are being done with Canada, at least.
Very good. Let's we got a couple minutes here. Ryland, what an inventory report. Smallest herd since 1951, which obviously supports some of these fundamental rallying that we've been doing. And then feels like hogs are kind of getting lumped in with tariff talks here. So why don't you start us off with livestock for the week?
Yeah, it's there's a lot on the livestock side for the market to digest, especially the cattle market. So, I mean, you have, like you just said, it was the smallest cattle inventory since 1951. So, like, the numbers on the report were definitely kind of lower across the board. There really weren't any signs of a clear expansion yet. I think the market's going to see that as still somewhat kind of friendly in this kind of environment, but I would say to be expected, right? I think the big fear kind of going into this was that there were going to be some numbers starting to show that we are starting to rebuild or hold heifers back, but right now it's just not going to be showing up in the data. The calf crop was slightly bigger than expected from last year, but still decreased. So I think overall there's a little bit of maybe concern that's going to be coming off for the big record long that's in this market right now. But then on the other hand, the U.S. is going to reopen up the border this week to Mexican imports after the screwworm debacle. So you've got that going on, and now those cattle are going to be tariffed 25%. So all of this is kind of starting. There's a lot of implications for what's going to happen. It's going to be a tough one to outguess exactly how the market reacts to all of this, but a lot of it just seems to be, I think we baked in a lot with the tariffs and already kind of, expected that to happen. We expected the supply of cattle to be pretty tight coming in here. So overall, it just feels like there's not a lot to really disrupt the trend right now, or at least solve the problem of really tight kind of feeder supplies right now. So overall, it just feels like more of the same. It's just to what degree. So we'll see what the market kind of baked in and how the futures kind of react today. I think that'll be a good barometer just to see how exactly the market's going to digest all this new information. But yeah, the pork is definitely on the menu as far as tariffs go. So I think the market has been seeing that as a little bit of a risk. I mean, we have seen some really nice fundamentals here. Cash was higher, about $2.80 higher last week. We saw cut out up $1.82. So like there seems to be some really firm demand here overall, and I think that the tariff situation we've been talking about it for months. So we'll see how it reacts today, but I don't think it's really going to disrupt too much of the trend right now. So we'll see how it goes, but that's on everybody's mind right now is what happens today. But I think at this point, looking down the road, there's definitely some lasting implications. It's just hard to figure out exactly what that's going to mean yet.
Yeah, Ryland, do you think the equities are a big question mark there too? I mean, how the equities act here as far as cattle?
Yeah, I mean, I do think so. I mean, it just feels like when we get into these situations, it get a little bit of a sell the fact kind of thing. And I think overall, it just, you see this big risk on in the livestock. You've seen it in the equity market as well. I mean, there's definitely going to be some concern when you start kind of throwing a lot of different stuff at this and with untold consequences that could be here. It may not be an immediate thing, but it feels like we're going to trade it right now. So that's why I feel like you've got a lot baked in the market. We've seen a lot of markets just kind of bounce off their lows, overnight after the initial report. So it just doesn't feel like there's a whole lot that's really new here. You know what I mean? So
yep.
That's just my take on it.
Oh, very good. Well, we'll keep an eye on any changing news developments, and certainly, Rylan, you'll keep us posted on the livestock side. A couple things to note. So we're in February. We are now starting to price our spring crop insurance guarantee at our price. So we'll keep you updated on that as well. Today will be the first settlement there for February. as we go through the month. We'll be watching that really closely here. Also, Jack has some information in the outro. Real special offer for everybody for this season up till April 1st. I know we've talked a lot about crop insurance, the importance of some of the decisions that will be made this year, and certainly risk management coupled with that is uber important. So give us a call. We can chat with you, share our story, and go through your individual operation. Just coming into the open here, I'll get a quick readout. March corn down about 6.5 right now. 475 is the last. March soybeans are down a quarter at 1041, and March Chicago wheat is down 3 1/4 at 556. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great start to the week. I look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.